Trying to understand what the market is doing can be very tricky for new traders, but in this video today I'm going to explain why it's very essential to focus on the structures, irrespective of the fact that price can be dropping drastically. On the intraday levels, it's always essential to look at the structure, look at the bigger time frame perspective, to have an understanding where price is headed and what to anticipate to do in the marketplace. Now, you have to also understand that no matter what you see in the market is a probability. It's either a high probability or low probability. Now, what makes a trade or an analysis a high probability is when that analysis is derived from a higher time frame. In that case, now if we look at Ethereum, the monthly time frame has consistently shown us that the structure is bullish because we're consistently creating higher highs and higher low, higher high, higher low, and a higher high. Then right here, potential higher low, but I can't really call it higher low yet until we break above this previous high, creating a higher high. Then here will be a higher low, and then the newly created high will be a higher high. Now, if we look at where we are right now, you can see that Ethereum is at this inefficiency resting right here. We mitigated it, and after that mitigation, if we go to the weekly time frame, we can see this inefficiency. We mitigated this inefficiency, and this low right here created that high. And if I remove everything on my chart for 1 second, now if we want to buy, we want to buy at a discount, right? And in this case, you can see how price came into a discount, accumulation, expansion. It went straight into an extreme premium distribution. Now, I still remain very bullish on Ethereum, and I'm going to share with you my key levels that I'm watching on Ethereum. Now, if price should invalidate that key level, then it means this low is the next run on liquidity. But if those key levels stay sustained, I'll be looking for a buy to rally above these highs, breaking above these highs, taking this liquidity, low resistance liquidity resting right here as well. Now, if we use our Fibonacci from this overall high to this low, this right here is our extreme discount. If I want to be a buyer, I want to buy at an extreme discount because that is the cheapest I can get in the marketplace. Now, if we go to 16-hour time frame, you can see right there. Now, the Fibonacci is just a measuring tool. To me, there's nothing special about the Fibonacci. Forget about the fact that you see it on my chart. I use it to derive the discount, premium, whatever, extreme premium, but it is just a measuring tool. The reason why I say it's just a measuring tool is because the Fibonacci, drawing the Fibonacci and anticipating for price to come there to buy, it doesn't make sense. What makes sense is what is resting at those key levels. So let's say, for example, this key level right here, this is our extreme discount. What is resting right here that is significant enough for price to come into it? Inefficiency, liquidity. Make sense? There's an inefficiency here, there's liquidity here. If price comes to the downside, mitigates either the inefficiency or run this liquidity, and I see a shift in market structure on 30 minutes, I'll be looking for a buy. You see how it aligns now? Extreme discounts, inefficiency, liquidity. If this key level is an extreme discount and I don't see any inefficiency or liquidity there, I will disregard this trade. I will not be interested in buying it for any reason. Even if I see 30 minutes break of structure or 4 minutes break of structure, I will still not buy it. Now, that being said, like I said, everything in the market is a probability. The fact that whether this is going to work, whether we're going to see a reversal here or not, it's a probability. There's no certainty anywhere saying we will definitely reverse from here. Another reason why I'm interested in this key level is because this was the last down close candles before an expansion to break this significant structure. This was the last push, You can see that very clearly. This was the last push down before a push up to break structure here. This was the last push, expansion, break structure. So if we're going to go to the upside, I'm anticipating for that to happen within this entire key level. From the bodies of the candle to the low, I'm anticipating for that to be an area of reaccumulation. If you can see the word I used, if we will go to the upside, the area of accumulation will be in this zone. Firstly, because of this last down close candles. Secondly, because of this inefficiency, liquidity. Thirdly, because this is an area of extreme discount. If you found this video insightful, if you have any questions or anything you want me to talk about in the next video, feel free to drop it in the comment section. I appreciate you for tuning in, and I'll talk to you next time.